Hello, this video is about the euro-dollar long-term strategy. So we're starting with our first video, and I'd like to show you a little bit of what we can do here. We have a variety of scenarios that we can decide on, and the signals that we are getting at the moment are a little bit mixed. However, I'm going to try to clear the air on what is that we see in front of us. Now, just looking at the chart in front of us, let's sort of simplify things a little bit. We have two things going on, and if I could start you with the monthly chart so you can have a clearer view, and this actually gives us a clear impression of what the general direction of this pair might be. And you can see that from this time here, 2008, coming down a descending line that serves as resistance, and this has happened already once at this point where I'm pointing in 2011. At the bottom we have another thing, and this is a support line, and this event is really a little bit less convincing than the top one, because it hasn't really provided support around this area, which is really a support generated by this support line here. It happens to be a Fibonacci retracement line, but that is a different topic at the moment. So just sticking to the support line for about 56 months, so quite a long time, from November 2005 all the way to June 2010, so nearly 5 years, there was no test of this line. Now you may question why we're drawing a line that is so far away from the action, and indeed if you drew a line here, for example, coming down to here, you'd have a descending line that would go nowhere, and this would miss the point. So it's much better in that respect to draw a line from here. And this is a long-term ascending scenario, so this trend is, but then this is quite a dip, which really means that we're not going from down here all the way up here. We're really going up here and then stalling, reversing. Considering this is a monthly chart, you're looking at a dip from 135, which is sort of the current level, current price, down to 117. So we're looking at nearly 2,000 pips, well, a bit less really, but 1,800 pips. This is not just any small dip, it's quite a reversal. Now interestingly, I just said the current price is here, and it's probably near this interim resistance, which is under this Fibonacci line. So we are potentially going to have a bit of a decision to make at this point, whether the price is going to reverse either in the short term or in a more decisive unwinding of euro buyers investments, or whether it's going to continue up until this descending line meets the price action here. And I'll talk about my projection in a second, but just also, as I mentioned earlier, the current price is really where we were in 2004. So we've gone through this cycle, a 1, a 2, a 3, and back to where we were in 2004. So what happened in 2004? We had this 1, 2, 3, 5 consecutive months of ascent. Now here we've had 1, 2, 3, 4, 5, 6 months, and then a bit of a dip, and we're going back up, but we're not really pushing past the beginning of the year as a level. So in 2004 then, this level was then a resistance point at which it basically this candle here overtook this other one, engulfed it, and then it was a descending price down to here. Okay, so the distance in terms of pips from this top here to this bottom here is about, it's difficult, so if you can see it, it's about 2000 pips. Okay, so if we descend it from here where we are now, which is roughly the same level as we were back then, okay, we'd end at 2000 pips just about here, okay, which is again at the bottom of the Fibonacci levels. So we'd end up really past this this support line in pink that I was showing you, this support line here. So we'd end up down here. Now this is not entirely against our projection, which is a bit sort of higher up, and this projection here, as this one, we arrived at by looking at this triangle, basically this wedge in the make, and we've concluded as a sort of rough estimate, really rough estimate, considering we're in a monthly chart, so every little movement is worth many pips. But so we haven't really been too specific. So we're looking at this level roughly, which is 1.38 something, and this level, which is roughly 1.22. Okay. These two levels are averages. So this top plus this top, okay, and over again the same distance, 34, is here for the next test of the resistance. So 34 months later from here, we would have April of next year as a sort of monthly roof being at this level, which is the 50% Fibonacci retracement level of this ascending price action back here. So this is a long-term unwinding then of the euro down, and then we would have also potentially another projection that may come to pass, maybe an average of what is this long sketch between the beginning of this and the first test, and then from here to the second test. So essentially, until we have a third test, this is not a support line in the strongest, well, or in a sort of a secure way, if that is ever possible. But really, even just psychologically, it's not so secure until we have maybe a third test. And some people would agree with me in terms of a third bounce being the sort of, by rule, the way to confirm the strength of a support line. So 1, 2, the average of these two distances, this major one and then this smaller one, gives us roughly 40 months, okay, or 40 periods on a month chart. So it would take us to this moment here, which is November 2015, which is here. Okay, so the center of this, November 2015. So we go up and down. Now at this point, this distance seems very small. In fact, it's really about 900, or nearly 1,000 pips. So plenty of moving space here. However, over a month, 900 pips is not necessarily a huge distance. So this could then be, in the context of sort of a monthly time frame, could be a congestion pattern arriving at this point. We'd have no room to maneuver in a sort of monthly context, and we could be seeing a reversal to the downside or a breakout to the upside back to these levels, or these levels, or these levels. Now consider that this level here where I'm running the mouse indicator, in 2009, end of 2009, and this level here, which is April 2011. So in a 2-year gap, it's sort of still resistance level at the 0.23 fib. This time unaided, and this time aided by this descending line, if you like. But the important thing is the Fibonacci level here being the same. So this is a clear descending line, but then it sort of goes level, almost. Okay, so really, it takes from 2008 to 2009, so 1 year, and then 2 years later nothing happens in terms of descending. It's really the same level here. So we could go back up, and this could be tested a third time, perhaps this level, okay, which would be 1.49. Now all these investments obviously would be several hundred pips, so still worth looking at them without sniffing at them too much. Now at the moment down here we see the slow stochastics with a 15.55 setting, showing us that the line is sort of crossing back up and going towards overbought, but there's a long way to go, so we are really going for bulls here. We're going up, and as a buying signal here, June, and continuing. So no sign of a reversal, or really just there's a continuation element. You see some lines here, and for that we need to go to a day chart. And these lines maybe a month ago were really just only useful in a 4-hour chart, but now from this top here we've had a lot of data now, and we can see really a channel in the making, and truly the width of this channel, the height being this 450 odd pips, is quite remarkable. And we have to really also consider that it's an ascending channel. There's a 200 simple moving average that crosses. At this point we have a double bounce really off that and off the channel bottom, so this is going up, and it has crossed the 0.61 fib. Here it was tentative and back down, and now it's crossed it above and to a higher high. So we have at this point the possibility of actually seeing this as a move up along this channel, which has tested this support, this resistance once, twice, 3, 4 times, until it sort of collapsed back and then bounced. So we could test the top again, or we could sort of just move within these two limits or boundaries. So we need to decide at this point. If we look at the daily chart and the stochastics here, we are potentially curving to turn and cross and perhaps sell. There's a red candle forming for today stroke tomorrow. We are in the UK, and this is Sunday night, so so it's not a full day candle yet, but so there is a sign of weakness. Here's a tentative reversal, and potentially not quite happened yet, but similarly you have a potential reversal here of an ascending trend, and not really truly a reversal, so it's not always given. It needs to be a trend to be a reversal, right? So this is not really a trend. Now if we looked at indicators such as the directional index, we'd see that and as parameters we'll give it 10, okay, for 10 days, so that's really 2 weeks. Now we have here a number of 57. That's incredibly strong trend numbers, because 25 is considered on a day chart the sort of number that would indicate a strong trend or trending environment, and this is 57, so obviously we have enough of conviction that there's a trend. and obviously it's an uptrend at this point. However, this is a day channel, so if you are looking at the monthly channel, which we were suggesting that we were going up, and this is also suggesting that we're going up. So we're looking at both. We've got the shorter term, the longer term, and they're both signaling up. We obviously have to be realistic about our trading context. So if you're a smaller sort of size trader in terms of the size of your stops, etc., maybe this is as much as you want to see. You want to know that the general trend is on the up for now, and then set your levels according to a day chart, seeing this rather than looking at this top line here, which is a long way away. However, we are sort of going towards that eventually, so it's good to know that there will be a limit to this channel, perhaps, if not broken earlier. Now, in terms of events, we have a number of events which are coming up, but it really is a quiet week, and we've got non-farm payrolls coming up in 2 weeks' time, as in 2 Fridays. So really there isn't a lot of event risk from the traditional sense, and we really need to take things with a pinch of salt. I mean, there are a lot of speeches from the Fed, voters and non-voters coming up, but really there isn't a lot of true event risk in a traditional sense. And if we actually just looked at the high filter or high impact events for the week, you can see that this week is thinner compared to, say, last week, which had quite an enormous amount of high impact events, and the week before last week we also had a quiet week. So we have really had a very strong volatility week, and we're coming up to a slightly less octane fueled week. However, that may be deceptive, because if I brought up the medium filter of medium impact events, you'd see that there are quite a lot of the PMIs for the Euro, the Chicago, there's the University of Michigan confidence here on Friday, Eurozone services, German consumer confidence, and a number of items here for indications of the state of the recovery in the US economy. So the durable goods as well. So we have a number of events. However, as I said, the high impact would really be limited to these few ones here. Now, obviously, we have a forecast here for a lower US consumer confidence, so this could be Euro positive, and also we have a positive durable goods orders from -7 to -0.1, so this could be dollar positive and euro negative. Not much in terms of change for euro figures here, so again, it's really almost a day by day for the week, seeing how the market will react. And the post taper has been that the dollar has sort of regained some of its losses, so we have had some degree of appreciation of the dollar. We have to look at the wider picture here, and of course we could bring up other elements, but I don't think that there are other events that we could consider, apart from the German elections, which is not on the calendar that we saw just there. The German election could be obviously something that we may want to focus on, but the results are not yet known, so we have to wait as the exit polls actually go through the night. And we can certainly see that there is a lot of speculations about possible outcomes for Angela Merkel's re-election. So any sort of piece of news at the moment is speculative, although the 70% chance of Angela Merkel winning a third term gives us an indication of how the mood is turning in her favour. So we can see that the voters have cast their preference from this morning, yesterday morning. Now we're into Monday now, but we just have to wait and see. So that is the end of our video, really. I'd like to wish you good night and happy trading for the week.